What is going on, everybody? Welcome back to the channel. If you are a first timer, then welcome to the channel. I'm happy you guys are here. This is our watch list for Monday, February 6th. I can't believe we're already into February. It's crazy. If you're new to trading, guys, I hope your journey has been successful so far. If it's not, you're in the right place. What we teach here is by far the easiest strategy that you guys will ever come across, that you will ever learn. There's no indicators. We use strictly what the candlesticks are telling us. And every candlestick tells a story. Once you can learn to read that and interpret what that candlestick is telling you, it really is that simple. And I always tell people it's as simple as 1, 2, 3. That's part of the strat, the 1s, the 2s, and the 3 candles. It really is that simple. And the other thing I always tell you guys is once you simplify trading, trading becomes simplified. So when you get rid of the worry of having to try and interpret and draw a cup and handle or a double or a triple top or a bear flag or a bull flag, and you can realistically just rely on what the candles are telling you and trading with time frame continuity. If you don't know what that is, end of this video there will be a time frame continuity video, and it'll explain exactly what it is and how to use it. But that's this little indicator. Now I've created a strat indicator on TradingView for you guys. It's got this time frame continuity indicator. It's got these candlestick numbers. It paints the inside bars yellow, paints the outside bars white. It highlights 3-1 setups and double inside bar setups. Gives you Sarah Strat Sniper's 50% rule. It basically combines everything that the strat uses into one script or one indicator for you guys to use. Now I use the word indicator, but they really aren't indicators. They're more of a tool than an indicator. But I want to get started on this list. You can get a hold of me on Twitter at Mr. Clark Griswold. If you like the videos, guys, make sure you're please subscribing, liking the video, commenting on the video. It all helps with the algorithms to help and try get these videos and this channel out to more people, because this truly is easier than anything you guys will ever have come across. I also have a Discord. It is like 95% free. There's a link in the description below for you guys to join in on that Discord. If you want to be in the paid membership, well, I give the top 5 from these watch lists that I send out. I give the top 5s out to the Griswold Gold members. I have the Strat Indicator as part of that membership. One-on-one time with me on Google Meet or Zooms are part of that membership. I have a live trading bot that sends out the setups for you guys so you don't have to go searching for them. That is part of the Gold membership. I have a 1-hour course on everything that I teach here, broken down into one simple course, 1 hour, takes you through everything. That's all part of the membership. So it's $50, or you buy 2 months, you get the third month free, or you can buy a bunch of that stuff separately. I have a new book coming out. We're working on that. I'm very, very close to it. I basically have the first draft done, but I have a lot of stuff coming out. We're looking at starting a podcast as well and a bunch of other things. So let's get started on this watch list. Again, all those links can be found in the description below or on my Twitter. So the first one we've got on the list here, guys, is XLV. So when we look at XLV, we had this 2-up that finished red. So anytime we have a 2 candle in the up direction, so a 2 candle is a directional candle. It either breaks only the high side of the previous candle, which is a 2-up, or the low side, which would be a 2-down. They're directional candles. But when we get a 2-up that finishes red, that gives me probability or high probability or a higher probability that this trade is going to head to the downside. So we set our trigger on that candle. So we're on the daily charts here. And then what I do is I'll set these up I set the triggers and the targets on a higher time frame. If these daily charts don't work for you, hop down to an hourly or a 4-hour or a 30-minute or a 15-minute and set your triggers and targets there, and then manage it on a lower time frame than whatever your triggers and targets are set on. I always go to the 5 because it manages my risk the best. Now, when I said it gives you a higher probability for this trade to work out, when I say that, I say probability, guys, because when this candle opens on Monday morning, no one knows what this candle is going to be. It could be a 2-up. It could be a 2-down. It could trade inside bar. It could go 2-up and then trade into a 3-bar, which breaks both sides of the previous candle. We don't know what it's going to be, but we have probability in every strategy that you guys will ever look at. Whether it's this one, which I think is the most simple and it's what I use to trade, or you look at something completely different, that strategy too is based off of probability. And if someone tells you anything other than that, they're giving you misinformation, because nobody knows. And whether it's this chart or a 1 minute chart, 30-second chart, no one knows what that next candle is going to be. They just don't. And that's why it's based off of probability. So when we're looking at a strategy and it's based off of probability, well, what happens when it goes against you? Then that's where the risk management comes into play. And the very best traders manage their risk the best. A great trader, and we have them in our Discord room, can win 1 out of 5 or 1 out of 6 trades, and they can still be profitable on the day, because their risk management is so precise and so good that they can cut a loss at 5 or 10% for 5 trades in a row, and that 6th trade can get them an 80 or 90% win, and they'll be in profit for the day. So probability and risk management are 2 really important things. So we have this 2 up, it finished red. Like I said, when we have that higher probability that this thing is going to trend back to the downside. The other thing I want to tell you guys, if the ads pop up, I appreciate you guys watching them. It helps pay to keep these videos free for you guys. But the 2 up red, and then you notice here, this is the time frame continuity. A lot of guys don't like to trade things on the weekly, the monthly, the quarterly, the yearly, if they have inside bars. For me, because my trades are realistically day trades / scalp trades, I'm only in a trade for like 3 minutes to an hour really at the most. I don't really care about the rest of these. Now, in saying that, if we have these in the same direction as our trade, again, higher probability that this trade is going to work in our favor. I really only need the hourly and the daily, but the more we have is a bonus, meaning higher probability. So we look for the 2 down. We look for a trigger at 132.25, the yellow line, and it's also marked out on the right side here. Looking at a first target, and we mark our targets out, we just put them at the low of the preceding candle for puts and the highs of the preceding candle for calls. Obviously, this is a put. We're trending to the downside. Our first target is 132.13. And so when we're looking at a strike price, I'm probably looking at a 132.50, a 132 strike price, somewhere in that range. So I usually get 1 to 2 strikes outside of my trigger price, whether we're going to the upside or downside. Expiry date, because this is XLV, I'm assuming the expiry date is going to be Friday. That's what I take. If you look at something like SPY, where their options expire every day at 0 DTE, 0 days to expiry every single day, I always take those 0 DTEs, but I'm very comfortable trading those. So that's the way I do it. If you want to get, a week out, 2 weeks out, that's fine as well. So that's XLV. We're going to go through these a little bit faster here because I've taken up a lot of your time already. AMC, 2 up, finished red. We can call this a shooter candle. A shooter candle has this body at the bottom, and this wick is 2 to 3 times the size of this body. Okay, so that's a shooter candle. A hammer candle is the exact opposite of this, where the body would be up here. Those are both actionable signals. The inside bar is also an actionable signal, but we have a shooter candle. We have a 2 up red, which we just talked about. We will look for puts on this at $6.03 and the first 2 targets. Now, I know I mentioned to you the targets on puts go to the bottom side, except when we have this gap. So you see there's no candle from here to here. We gapped up. When we opened up from this day to this day, we gapped. So there's a gap there. So now in order to close that gap, our target becomes the top of that wick. And then the next target would just be the bottom of that same candle, or until the gap is closed. So those are the first 2 targets on AMC for puts. And I will tell you guys, be cautious, because we have half red, half green, half to the downside, half to the upside. On the long term, they're telling us we have buyers on the month, the quarterly, and the yearly. On the short term, last week, we had sellers on the hourly, the daily, and the weekly. But Monday is a new hour, it's a new day, and it's a new weekly candle. So this very well could trend up. It very well could trend down. We have to see what happens. Again, I only need these first 2. Anything else is a bonus. That's AMC. We'll move on to MU. That's Micron Technologies. So again, we talked about these shooter candles. We also have an inside bar. So now when I'm talking about inside bars, guys, I love the inside bars. So anybody who's followed me for any amount of time knows this already. If you're new or struggling, I tell people to concentrate on the inside bars. They're easy to see, especially with the indicator that I've got. They don't break the high. They do not break the low of the previous candle. They stay within that range, and it's a consolidating candle. It means it doesn't know which direction it's going to go. It's a tightening range. And when we see these inside bars or these yellow candles, I want you guys to think of a spring or something being loaded, compressed, compacted. And when you take that pressure off it, you would expect that spring to jump up to one direction or the other. And that's exactly what we expect off of an inside bar. So here we gap down, so we didn't really get that break to the downside we were looking for. And again, that's probability based. But here you have one here where we opened and we ran to the upside, hit targets. And that's all you guys have to do is go back in time and look. Again, they don't always work, but probability tells us that we usually have inside bar, big break. Okay, inside bar, break to the downside, and we hit targets. It did exactly what it told us it was going to do. It said, if I break to the downside, I am likely to hit this first target, which it did exactly. And that's the story that the candlestick tells you. And the quicker you guys are able to interpret it, the better off you'll be. So we have this inside bar again, actionable signal, right? Just like the hammer candle and just like the shooter candle that we have here. So again, two actionable signals, shooter candle, we're going to look for strikes, or sorry, a trigger price of 61.90. Now, I don't like that this target only has 4 cents between here and here. So the thing I tell you guys to be very cautious of, a lot of times what happens is we will break, we'll open, we'll hit triggers, we will hit targets, and we will reverse back through that target and never see it again. So you guys have to be prepared to either take your profit at that target when it reverses through, or accept a small loss or a break even if we break back through the trigger side. Now, again, I don't care if you're at 4% or 400%. That's the psychology of trading, and that's what the book that I'm writing is on, is the psychology of trading. And the quicker you guys realize that there's always more trades, and that you can take a 4% trade and still be profitable, you can take a 400% trade and be profitable, but you better be prepared to take those profits and not let that thing reverse and trend in the wrong direction and possibly put you in a losing position. Okay, so we'll move on to Oracle now, ORCL. So this is opposite of what we've been seeing. 2 down green. So we finished 2 down, but we did finish green. So that, again, gives me probability that we have potential to head back to the upside. So we will look for triggers back to the upside. There is our trigger at $90.26. The time frame continuity would be in our favor, and a really nice target, almost a dollar move at 91.22. Now, you notice this orange line. If you go to I put that orange line in, that is my yearly marker for us to go 2 up on the year, which we did already. We are 2 up on the year on Oracle. We broke past that inside bar. Okay, so it's a 1-2 setup, or a 2-1-2 setup, however you want to look at it. But that's on the yearly. So we have buyers on the year, month, quarterly, weekly. So we are trending up. Now, is it going to continue? I don't know, but right now it's telling us that yes, we should have a continuation back up to the upside, or a reversal, I should say, back to the upside on Oracle. We move on to QCOM. QCOM, the same thing, 2 down, finish green. The time frame continuity is there. This is actually what we call a 1-2-2 rev strat. So it is basically a 2-2 reversal back to the upside, but there's this 1 bar here, which makes it a 1-2-2 rev strat. Trigger at 138.40, good magnitude at 139.16, second target at 139.94 on that 1-2-2 reversal. American Airlines, there's those inside bars we were talking about, also atop of a broadening formation, which you've already hit. So we'll see if we break through that broadening formation or we trend back to the downside. Again, time frame continuity pushing to the upside, calls at 17.22, puts at $16.85. There is your first target to the bottom side, and there is our first target to the upside. If you want to see that broadening formation and how it's drawn, it goes quite a ways back. We're back into, looks like July, where we hit higher highs and higher highs, and again, higher highs, but then we hit the lower lows, and we hit the lower lows again, and then we come up, come back down. You could have drawn another intermediate broadening formation in here, and then we break through it and hit the higher highs again. So does American Airlines have that continuation back to the upside, or are we going to look for it to come back down now that we've tagged the top of that broadening formation? I do have a video on broadening formations if you guys want to check that out as well. Basically everything to do with the strat, guys, you will find a video on it within this channel. Okay, I have a learning tools playlist. I've got a beginners learning tools playlist, a SPY series, all kinds of good stuff for you guys. We look at AMD. AMD has the inside bar shooter candle. So we can look for calls at 88.80, first targets marked, puts at 85.83, and then the first target marked to the bottom for AMD off of that inside bar. We go on to Beyond Meat, another inside bar, so puts at 19.23, calls at 20.88. I will mark the first target to the top side with you guys if you are charting with me. We move on to CCL. CCL with that inside bar. So again, calls 12.15. We can mark the targets out together. And if you're looking at how I snap to the top of the wicks, guys, on TradingView, there's this little magnet on the left-hand side. You guys probably won't see it, but you'll see a little magnet there. The other thing I want to tell you, this screen that you guys see here, I have a link in the description below. That link will get you a free 30-day trial to TradingView and then up to $30 off of your subscription if you decide to move ahead with them. So make sure you guys take advantage of that as well. That's CCL. We move on to Cisco. Also the inside bar on Cisco. Calls at 49.30, puts at 48.51. We can mark these targets out together. You're going to see some pink lines on this chart likely as well. And that pink chart, or those pink lines, are the weekly triggers, which I will try and get that video for you guys as well. So there's one right here. Let's look at CVS, because CVS, if we go back to the start of January, has been a constant just downtrend. And even before that, really. But this new year has been a constant downtrend. There you see that orange line again. That orange trigger, that's for us to go 2 down on the year, which we have done already. So CVS Health Corporation, we are looking. We had a 2 up, finished red, so we're looking to trigger down on the daily, 85.61. That pink line is for us to go 2 down on the weekly as well. We have full time frame continuity. We are 2 down on the quarterly. We are 2 down on the yearly. Everything is not looking good for CVS in 2023 so far. So I would look for this for a continuation to trend down. This blue line that you constantly see here, guys, that's a 9 EMA. I do have a video coming out on that, so make sure you're staying tuned for that. Exactly how I use the 9 EMA. It's not strat based. It's just another tool that I like to share with people when they want to know and when they're a little bit more advanced. Helps me keep myself in a trade a little bit longer and break out of those TTOs, those little triangles where we have the little pullback and then it continues to go on further. That 9 EMA a lot of times will help you out with that. So we look at CVX. CVX, again, is in a downtrend. Again, full time frame continuity to the downside. We're looking for puts at 168.49 on CVX. And again, the top 5, if you guys want this, it is within this list. It's for the Griswold Gold members. So go check out everything that I offer for free or fee-based is in that Discord. There's a list of things that I have that are included with that Discord membership. But like I said, even for you just to join in there, the majority of it is free. Lots of great channels in there, lots of great chatter with a lot of people there. So go check that out. Disney has the inside bar shooter candle. The wick is about 2 times the size of what we see here of this body. So again, we can look for calls at 113.14, puts at 110.37 on DIS. DocuSign, inside bar, shooter candle. The thing is, we've got full time frame to the upside. We do have a gap to fill here, so we can see how that plays out. Target 1 is not great, but target 2 gives you a little bit more beef on the play. And then let's mark the target to the top side for you guys on DocuSign. There is your setup, inside bar on DOCU. Ford Motor Company, 2 down, finish green. Big gap fill here. But there's a wick at the top, so we use that one. Then the bottom one, and then the top. Ford trying to make a move back past this line right here. That is our quarterly line to break 2 up on the 3-month chart. So through January, February, March, April will start a new quarter for 2023. But let's see how this plays. We have the 2 down green. We've got time frame continuity here outside of the month. So let's look for calls at 1361 on Ford. General Motors with the inside bar. So calls at 41.99, puts at 40.31. IWM with the inside bar shooter candle. So calls 195.70 and then puts back to the upside with time frame continuity at 199.13. First target is only 13 cents away. So you would have to go further back on GM. It looks like here. That would be your next target there. Okay, so let's zoom back in there. And from IWM, we go into Meta. That's Facebook. Inside bar, shooter candle, big gap. Which way is Facebook going to run? So calls 196.77, puts at 182.89. There's the numbers I'm calling out on the right-hand side. We move down a little further. Inside bar with MS. Morgan Stanley calls at $100.18, puts at 98.07. NVIDIA inside bar, a lot of these, calls 217.45, puts at 207.89. Full time frame to the upside on that one currently. Pfizer, here's another one. Inside bar, we had a nice break, hit a bunch of targets. So now we have this next inside bar. On Pfizer, we look for calls at 44.39, puts at 43.88 on PFE. PayPal, inside bar, shooter candle, calls 87.84, puts 85.20. There's your next target to the downside, and then we have that gap to fill as well. Then from there, we go on to SLB. So SLB with the inside bar, full time frame to the downside on SLB, looking to break 2 down on the month right here. Is that correct? Yes, we're looking to go 2 down on the month there at the top of a broadening formation on the monthly. So triggers to the upside, calls 54.67, puts at 52.55. Snap, inside bar, shooter candle, very similar to what we've seen. Calls at 11.61, puts at 10.78. Space, inside bar again, triggers 6.45 up, 5.93 down. UPST, upstart, shooter candle, gap to fill. Calls at 24.18, puts at 21.55 on UPST. Move on to VLO, also with a 2 up red. So we're going to look for this to continue to the downside. 131.73, 131.50 is our trigger there. XOM, inside bar, calls at 114.11, puts at a 111.56. Then we also have an inside bar on the weekly, looking to break out of those 2 pink lines as well. And then XOP, 2 up, finished red, puts at 134.75. First target at 133.73. Guys, that's the list. Make sure you look for the weekly swing list. Good luck trading on Monday, guys. I wish you nothing but the best. I wish you nothing but green. Hopefully you guys are enjoying the content. Make sure you're subscribed. Hit the bell. Get those notifications. Join us in the Discord and follow me on Twitter. And we will see you all on the next one. Bye-bye.